everyone. I am Dipankar Vedant. Today, I will narrate my understanding on the topic GST and its impact, for which I have divided my topic into the following points. First, introduction. Second, nature. Third, explanation of the GST model. Fourth, working. And fifth, the impact on the economy. Introduction. India has seen a number of tax reform in the past 2 decades. GST has a comprehensive tax levy on manufacture, sales and consumption of goods and services at a national level. The primary idea behind this move is to replace a multitude of existing taxes in the form of value-added tax, service tax, excise tax, and state levy taxes being integrated into a comprehensive tax on the manufacture, sales and consumption of goods. GST is most ambiguous tax plan reform which aims to stitch together a common market by removing the fiscal barriers between the states. It is a single national uniform tax levied across India on all the goods and services. Second, the nature. In GST, all the indirect taxes are subsumed into a single regime. The GST taxation law has put an end to a multitude of taxes which are levied on different products, starting from the source of manufacturing to reaching the end consumer. GST works as a fundamental principle of one country, one tax. GST is an indirect tax which subsumes almost all the indirect taxes of the central government and state government. Third, the explanation of the GST model. It is a dual GST model including CGST, which is Central Goods and Service Tax, and SGST, which is State Goods and Service Tax. CGST has subsumed the taxes like the central indirect taxes, excise duty, central sales tax, and service tax. Whereas the taxes collected by the state government, like state VAT, the purchase tax, the luxury tax, octroi is being replaced by SGST. Integrated goods and service tax, which is known as IGST, also called as the interstate goods and service tax, is also a component of the GST. It is not an additional tax, but it is the system to examine the interstate transaction of goods and services and further assure that the taxes should be received by the importer state of the as the GST is a destination based tax. Now it's working. The dealer registered under GST will charge the GST on the price of goods and services from their customers. They will claim credits for the GST included in the price of their own purchase and the goods and service used by them. The seller or the service provider collect the tax from the customer, who may or may not be the ultimate customers. And before depositing the same to the exchequer, they deduct the tax that they have already paid. The impact of GST on the economy. GST has eliminated the cascading impact on the production and distribution cost of the goods and service. This reduced cost of goods and services, leading to an accelerated GDP growth. GST without tax barriers will lead to economies of scale in manufacturing industry and reduces the supply chain cost. GST has reduced the production cost by 15% to 20% in many of the products in view of the full input tax credit, which has favorable impact on the prices of products, and improve the tax compliance and higher tax to GDP ratio. The tax to GDP ratio has increased by 2% as per FRBM report. This works out to about rupees 80,000 crores of additional revenue which the central government and state government has collected. GST has removed the tax distortion from the economy. This has led to sustain the higher output-based competitive strength of the country. Simple tax system attracts more productive investment for growth. Yeah. Since the implementation of the GST, the price level has reduced. The price level has reduced in the economy. It has also resulted in the increase of the consumption level and the growth in GDP of the economy. According to the study by NCAER, the National Council of Applied Economics and Research, the implementation of GST has lifted the GDP growth by 0.9 to 1.7%. In GST, the exporter get a full tax credit. The export unit quotes better price for their products and services in comparison with the present scenario. Increased exporter has the positive impact on the balance of payment of the country. GST has led to the imposition of the same tax rate on the goods and services everywhere in the country, and by implementing the same tax rate, it removed the inequalities between the markets. Since the proposed GST will charges full tax on each and every transfer, it's difficult for the firm to evade tax from the payment. Thus, it will lead to more the chances of reduction of tax evasion. With this, I conclude here. Thank you.